Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Thursday, May 22nd. Going to be going over the usual tickers, but then also I do have on the list Marathon Digital, ticker symbol MARA. Let's see, Lithium America's ticker symbol LAC, as well as ChargePoint, Plug Power, GameStop, and then also AST Spacemobile or Spacemobile, however you want to say it. That was requested on X, so I will be going over that towards the end of the video after I do check the chat. But I do have that hidden from me right now just so I can focus on these tickers. So yeah, let's dive into it. Some exciting stuff going on in the markets. And so the UVIX over here, which is the 2x long VIX futures ETF, closed yesterday at a price of $31.66, being up about 13% on the day and continuing up nearly 5% in the pre-market, currently trading above $33. And I believe my average is $32.78, somewhere around there. So that does mean I am in the green. And, I could see this moving up to, talked about it before, right around $36, just bumping into that downtrending light blue line there, and maybe getting up to fill that gap here at $38.12, which was the closing price on May 9th. And just to note, taking a step back where that downtrending light blue line comes from, it has been the top that we have been trading in this parallel channel. It's been the top of that parallel channel after we had the big move up on August 5th, and then we really just consolidated in this range before getting ultimately rejected here, pulling back down to around $30 before getting another massive move to the upside, hitting a high of 105.18 on April 8th, and then pulling back into that parallel channel. So yeah, I think that parallel channel, the top of it, has been resistance in the past. I suspect it will be again. I would like to take a 20% swing on this, which would mean, a price of, above $39. But to be honest, I might get out of it before then, just because it's good to be short term with the volatility. And this is really just a nice way to hedge, as we will see in a minute. The S&P 500 is down and the UVIX is up. And with it going up, we can see this pretty nice big spike in volume here, corresponding with this nice spread in the candle, opening down here, closing up here. So it does look like it's backed by volume, but we'll have to see, does this continue up? It does look like it will, with it trading at above 33.50 now in the pre-market, but will we see a red candle, maybe a reversal over the course of the trading of today, or do we see a continuation up? Do we still see a wider spread candle than we have seen in previous days? And is that backed by increased volume? And does that increase in volume correspond with that spread? So what we want to see is a wider spread, so a bigger candle here corresponding with more volume. So yesterday, 16.45 million shares of this ETF were traded. So we want to see more than that today if we are to get, let's see, a candle going up, just like that, which did not show up because it was a straight line on one day. But yeah, if we do get a line going up to, or a candle going up to around $36, we would want to see increased volume. If we don't see that, or if we do see, move up to 36 but less volume, that does suggest there is some divergence between price action and volume. There isn't volume backing the move, and that could be suggesting rejection over here. So we'll be good to keep an eye on that. For now, though, I am just chilling, although I do have, limit sell at a 20% gain. And let's see over here, what we can see looking at the 10-minute time frame is yesterday during market hours did dip down to a low of 28.06, nearly hitting 28. And I also should note that I did previously have a limit buy order at 27, but if we look at prior trading days, we actually did have a dip to below 27 at 26. 23 hit on the 13th, which I believe was, I'm not sure if that was Monday. Let's see. No, that was not Monday. I think that was Tuesday. Yes, that was a Tuesday, but I didn't have that limit buy order placed. And then the following low that we hit after that was 27.10. So I've actually removed that limit dip buy order because I don't see price going down there because, like I said, we did have that low yesterday of 28.06. And then we did launch up, effectively testing $30, this green line here, as support, and then moving up to around 32.26, hitting a high of 32.55 before getting rejected multiple times from that level, not only during market hours yesterday, but into the after hours and overnight trading. But now in the pre-market, we have pulled back to a low of 30.99, and then we are launching above, having hit a high within the past 10 minutes of 33.60, where we're currently trading, like I said, right around 33.50. So very interesting to see that. We'll have to see where the price action takes us today. And then flipping over to the VIX, which is the market volatility index that the UVIX is based upon. And so the VIX closed yesterday at a price of $20.87. So now back above 20. The last time that we traded, or I should say closed above 20, was on May 9th when we closed at 21.90, leaving this gap behind, which is the same gap that I talked about over here on the UVIX. And so for the VIX, that is at a price of $21.90. We'll have to see if we fill that gap. I suspect, since the VIX is not showing any data here right now in the pre-market, I suspect that we will be filling that gap today, but maybe we do get rejected from there, so it will be important to keep an eye on that. And so I will definitely be doing that, but really I am just going to be looking at seeing what happens with that the volume here on the UVIX relative to the price action. I want to see a big candle move backed by increased volume, and then that could be suggesting maybe the UVIX could be getting up to this yellow line here at 44.42 based on this low from April 9th. And if we look over at the VIX, that would be corresponding with the low over here, which is at a price of 31.90 right there. So we'll have to keep an eye on those levels. And then, so yeah, now since we've talked about the volatility, the potential upside to the downside, let's now flip over to the the SPY, which is the S&P 500 tracking ETF, which closed yesterday at a price of $582.86, down 1.69%, down $9.99. And then in the pre-market down even further at around 580. And so what we can see, and I believe actually on Monday, what was talked about, the Moody's downgrade, that a lot of retail was stepping in buying there. So retail was buying the dip, but then it was pointed out to me yesterday on X by Colin Gladman, or just pointed out in general, that while people were buying that dip, retail was in the lead on that one day on the 19th. If they didn't take profits, which I imagine they did not, the SPY is down lower, breaking down from this rising wedge that I have been talking about. So, not looking so great, and it does seem like we could be testing this purple line here right around 570, only $10 away, so that seems pretty reasonable at this point. And what we can see following this kind of rollover is that volume has been increasing, backing the move. So that does suggest that we will see further downside. And so this could be a good time to maybe, hedge with something like the UVIX, which is what I have been doing. So I'm happy about that. Although I haven't been adding to that position over the past few days, I have just been, waiting for the stock market to start rolling over, which it is. And so, I am glad I am hedged with the UVIX. But yeah, with the SPY here, we can see that the high from Monday was $595.54. We did see, a pretty big widespread candle here, but relative to the previous day, so on Friday, we had this smaller candle, we had this bullish engulfing candle, so that did seem good. But what do we notice with the volume? It's not really that exceptional on Monday. So 68.17 million shares traded, which is actually a smaller amount of volume than we saw on Friday, which was 76.05 million shares. And so with that amount of volume, we saw a move like this. But then with this volume over here, that was less volume. That didn't really support this big move. And even if we look over here, this is 71 million. That was actually more volume than over here. So this smaller spread in price was backed by more volume than the larger spread in price here, backed by less volume. That is showing divergence and, a sign that we're rolling over. And then also, we didn't see a massive decrease in volume when we had this very narrow spread in volume on Tuesday. So this was 60.61 million, smaller volume. And we are now seeing, as we can see very clearly, this increase in volume corresponding with a bigger spread in that candle. So it is rolling over, and maybe we do head down to fill this gap, even at $564.34. We will have to see. But then looking over at the 10-minute time frame, we can see that we had a dip near test of 581.68, this red line here, during market hours, and then just kind of floated up into the after hours and overnight trading, even into the pre-market, but then we saw kind of a massive dump here. And so let's see what that might be corresponding with, considering the news over here. So about 23 minutes ago from Benzinga, live on Fox Business, Fed's Waller says, doesn't see much from tariffs to drive inflation persistently. Everyone in markets expected more fiscal restraint. I'm not sure what that says. Let's see if I can pull that up. More fiscal restraint from tax bill, as long as economy gets back on good path, could reinvigorate demand for U.S. assets. So yeah, it doesn't really seem like that news. Maybe the downgrade is done. The investor response is just beginning. So yeah, what this could be is just a dip buying opportunities, in all honesty, because my understanding of the Moody's downgrade on our debt, the U.S.'s debt, is that there were 3 rating agencies, and the first 2 had already rated the U.S.'s debt at AA1, and Moody's at that time was still at AAA rating. And so they just downgraded but aligned with the other 2 rating agencies. And so I think that it's kind of priced in, and this does seem like it is an overreaction. So I would not be surprised if maybe next week we start to see a bounce. But yeah, where could this be dipping to? Like I said, 570, maybe around 565, 564, filling that gap. And then maybe even coming down to this orange uptrend, which goes back to, I believe, the low of April 19th, April 19th, yes, and as well as August 5th. That trend line coincides with another gap fill that's really just below us right now. That's at $554.54. So we'll see. We've got 570, about 565, and around 550. Those are all levels that we could be pulling back to. So do keep that in mind. And also, with that being said, since we are starting to see a pullback, maybe I want to do a Fibonacci retracement so we could see where this could be going to. And so let's look at, the first stop, the 382. That's around 552. So maybe that's a good one to keep an eye on, as well as the 23.6 or the 236, that's around 568, 570. And so that does correspond with that yellow line that I have marked there. Pretty cool how pretty much perfectly that lines up there. So those are 2 levels I would keep an eye on. And so maybe what we want to do here is, color that retracement green. And well, actually, why are there... What's this? Oh, yeah. Maybe I'll just leave that white, actually. Maybe I'll actually change that to light blue, and we can see that I did have that green. Actually, since we're below that, maybe I do want to make this, let's see, maybe I do want to make this green, but then make this line yellow since we have broken below it so far very clearly right there. But yeah, let's look over at the SPX, which is the S&P 500 index, which closed yesterday at a price of $5,844.61, down 1.61%, being very similar to that 1.69% down on the SPY. And so just to kind of match things up here, I am going to color this line yellow, and then I'm going to do another Fibonacci retracement here, going up to the high that was hit on May 19th, and we can see that the, let's see, 236 corresponds with the price of $5,701, right around there, approximately corresponding with that gap fill there at about $5,659.50. $5,660 right around there. I do have an alert there, it looks like. And then also this other gap down here at around $5,569, also corresponding with that orange uptrend like the SPY, going back to the lows from over here on April 19th as well as August 5th. And the reason why I am checking the candles, the dates over here to be precise, is because sometimes the SPY, the SPX, as well as the UVIX and the VIX, sometimes the dates do differ, maybe off by a day or two, so it's always good to check. Just in case you guys want to draw these lines up on your chart, you can draw that level. Because that was significant support in the past where we had some really nice dip buying opportunities, I think that could potentially be some really nice dip buying opportunity, again acting as support, although we did break it over here, so maybe it's not so significant support. But yeah, I mean, really just like a dip to around 5,700, maybe getting to 5,000, sub 600 to around 5,570. We will have to see where that takes us. But yeah, do think that we could be seeing a pullback, so good to brace for that. And then speaking of pullbacks, and really the inverse of them, let's talk about all-time highs with Bitcoin, which is currently trading above $111,000, hit I believe, well, actually almost hit 112,000. And these numbers are getting to be tongue twisters. It looks like on the Webull data, hit a high of $111,933.55. But if I do pull up the data over here, and let's see, TradingView, and this is data from Coinbase, which you can see up there. It looks like the high was, $111,903.84. So nearly getting to, let's see, 112,000. And it looks like the kind of consolidation highs here, which is really just, where two candles overlapped, where the hour ended and the new hour began. Looking at the hour time frame here, that was at a price of, let's see, around, 111,800 $800, somewhere around there. But really, I mean, it does look like where we're currently trading at, or just below, we do have a little bit more consolidation there with kind of overlap of three candles there. So not just open to close and a switch over to a new candle, but actual overlap between three candles here. That is around 111,500, which is, right around where we are currently trading. And so what I could see happening with this is a pullback and retest to around 108, which we effectively did get. Part of the reason why I have this pulled up is because, let's see, if I do pull it up on X, which I'm not going to just because I don't think it's necessarily that relevant, but there was some exchange that I responded to, I commented on, and nobody paid any attention to me. It was with Wyckoff Analytics or Wyckoff, charts. And so I just kind of wanted to be practicing my analysis. And what I saw on this big move up when we did cross to that new all-time high, hitting $109,000 and $109,095.38 here, and then wicking up to, it looks like a high of 109,500. What I saw on this was, a big move up here with increasing volume. So that looked pretty good. But then with this red bar, this volume here, we saw a much smaller spread in the price action. And so that suggested to me that there was beginning to be some divergence. We saw increasing volume, but a decrease in the spread of that candle. And then we actually saw a pullback in the volume, which did match with this, but it was followed by this divergence. So I expected to see a pullback to around, the levels here around 108. But we actually got a dip to, 106,380. And, but then we did bounce. So that was kind of more of a breakdown, more of a pullback than I was expecting. But this is on the hourly time frame. So if I do switch over to the daily, it does look like we have had, a nice little breakout here and a little bit of a retest of the levels that I've marked during Crypto Corner's Sat Stacker. And from that, we can see that we have taken off, but maybe we do see something, like this, and then a retest, which could be around 105 before then taking off to new all-time highs. But as of right now, we haven't, seen that yet. The day has really just begun for the 22nd. But what we can see, looking at the daily time frame here, is that we did have a little bit of divergence here, bigger volume corresponding with smaller spread in that price relative to the spread over here. Then we did see a little bit of a pullback in that volume with an increase in price action here, and then a massive move in the volume and the price. And so we will have to see where this ends up. If we do start to pull back, but we do have more volume traded, that could be suggesting that we could be, in fact, seeing a pullback to around 105 before making new all-time highs. So good to keep that in mind. But also, following that massive ramble on TradingView, what we can see here is that I did draw this 2-week box probably about a week ago, suggesting that, like what we had seen over here, about 2 weeks of sideways price action, that we could be seeing about 2 weeks of consolidation here before a breakout, and just a day or two off. It looks like that I nailed it there. And so just like what I was saying with looking at the TradingView chart, we could see a pullback over here to maybe 108, maybe a dip down to, like I was saying, around 105, getting to those consolidation highs, the wick highs from the past before breaking out to new all-time highs. And so that would really just be corresponding with, let's see. I'll just go the wick high from May 10th. That was at a price of 105.2159. So I'm just going to lock that into place, make that a thick line, and draw that as, let's see, a yellow line, I guess. That could be a very nice dip buying opportunity before the next leg up, or just a level to be paying attention to not be panicking. If we do dip down there, that could be just a healthy retest before launching further up. So yeah, I'm really excited about Bitcoin. I imagine you guys are too. But now let's flip over real quick to Ethereum. And so this is trading. Ethereum is trading above 2,600, right around $2,650 per coin. And we haven't hit a new high for this range here, which was around 2,740 hit on May 13th. We are still consolidating in this range, which should take about 2 weeks before we do break out. And let's actually look back in time at this range that we saw over here. Really not too exciting, but what we can see, if I do zoom in like this, let's just compare the same time frame to what happened with Bitcoin. And so Bitcoin really, started to move up here more notably and then breaking out over here. And so that was between the 6th and the 7th. If we do look at Ethereum, Ethereum did start to go green on the 6th, but it really didn't start to break out until the 7th. So it does seem like Bitcoin was more of a leader here, having been up, let's see, over 2% on the 6th, followed by 2.75% on the 7th, whereas Ethereum over here was up just over 1%, but then led into over 4%. So maybe that's just a difference in where those candles begin and end, because this is really up about 5% in total, whereas Bitcoin over here about 2.75. So yeah, I mean, it's kind of pretty similar. But then of course Ethereum had this massive move. Let's just look at it with the candle over here on the right. So that was then a 15, almost 16% move with Ethereum, whereas Bitcoin over here then moved up only about 3%. So yeah, I mean, a lot more potential upside with Ethereum. So I think that the next leg up could be bringing Ethereum to over $3,000, maybe $3,500. I do think I have some levels corresponding with that. The 100% extension is around 3,400, but I could actually redraw that now because we do have this lower low there relative to what I had drawn before. And so that would be suggesting, I'm going to guess around 3,200, actually 3,300. So maybe looking for some resistance there, but also do have an alert at 3,000 just to keep an eye on that. And then so now getting into the stocks, let's get into some of the tickers. I did want to go over Marathon Digital, which is ticker symbol MARA, also known as MARA, closed yesterday at a price of $15.84, being down 2.16% on the day, but we are bouncing pretty nicely, just about 5% in the pre-market. And this is something that I did talk about very recently, is that it looks like we have this very nice inverse head and shoulders pattern followed by a break above that approximate neckline to form a bull flag. Although we did get, kind of a discouraging rejection here, hitting a high yesterday of 17.22, but then closing below 16, but still, like I said, above that yellow trend line. So that does look to me to be pretty bullish. I did add to my call position yesterday. I believe my average is now at 108. I'm just going to pull up the contracts here so we can look at that real quick. And so this is the $50 call that expires in January of next year. So I've got, plenty of time before this, goes to zero. But let's see, we got some potential resistance over here around 240. I actually have a limit sell order, I believe around 183, just because that would be, taking some nice profits for myself. And yeah, between now and January, do I see MARA hitting $50? Let's actually look at that, because maybe I want to be less aggressive with my take profit there. I mean, the highs over here from February earlier this year were $34. And what price was Bitcoin at that time? It was a lot lower than a lot lower. I don't know. Let's see. Let's make sure these charts are lined up. So let's see, looking over at MARA, this was, let's see, February 28th. So let's look at the price of February 28th for Bitcoin, which was right. Yeah. So I believe the timeframes are lined up. That was actually kind of the lows over here. So really not that impressive. And it does seem like MARA was a lagger relative to Bitcoin. So if Bitcoin's hitting all-time highs now, I think maybe a month from now, because that's kind of, the lag here, the all-time high for Bitcoin was hit on January 20th, right around there. So about a month later is when MARA was hitting those highs But let's see. Yeah, and actually at that time, around January 20th, January 19th, Mara was hitting some lows here. So this does seem like it is lagging Bitcoin. And so, yeah, I mean, I think that this could be heading up pretty high, 250. I'm not really sure. 34 right here. And then, but back here where I do have this box, I think I was suggesting a little head and shoulders pattern back there. Does seem to have played out. But this was a high of like over $80 hit on in November of 2021 when Bitcoin was topping that year. So yeah, I mean, I think that Mara could definitely be going to 50 by January. But at the same time, I do think that options contract could be expiring worthless. But let's just look over at the data here for that contract. We can see the bids and asks, whatnot, the volume traded for that contract. But I'm not necessarily specifically interested in that contract. That one was just basically in my price range. And I should note, being in my price range or whatever, I did dip buy yesterday, but I dip bought not at 90 cents, I actually dip bought at 95 cents. I suspect we will be opening higher today, potentially, above 108, which is currently my average. So feeling pretty good about this. But then if we do look over at the net call and put premium from yesterday, we do see a net put premium increase of $1.3 million, whereas we saw an increase greater than that, about double that, in net call premium, going up $2.56 million. And so we can see that here with the net call premium in green going up and staying up as the price in yellow did pull back towards the end of the day, whereas we saw the net put premium increase. And since that was kind of a smaller increase, I feel like that could be people, incorrectly, buying puts on this pullback because we are seeing prices go higher. And then if we look back over the past 7 days, yeah, we do see kind of this change here going from, let's see, a high of 1.75 million now to a high of 2.56 million, having hit a high of net call premium yesterday during market hours of, let's see, 3.39 million. So looking really good there. And then if we look over at the past 30 days, the highest net call premium that we saw was $10.75 million on May 9th. We have seen price kind of, double top since then, but I do think that we will be seeing it taking off. So yeah, pretty excited about Mara. And then the next one that is on my list, I haven't covered this in a little while, and I'm actually going to cover this instead of uranium just because that's been hanging out around 28. Not really too exciting. But yeah, looking at Lithium Americas, which is ticker symbol LAC, my alert did go off yesterday, which was at a price of, let's see, 275. Actually surprised I did not have it at 269, just having fun with that number but I should note the low yesterday was not 269, so it wouldn't have gone off. The low is 273, and so I did have this. I did not touch the chart here, believe it or not. We did have a pullback, just like I had doodled, although I was a little bit early with it, to this green uptrend. So we'll take a step back and look at that in just a minute. But I did want to go over these other levels that I have marked here because maybe they're significant, maybe they're not. And so this yellow line here, horizontal going across there, let's see, that approximately corresponds, with the consolidation, the lows. We were finding that level as support over here. So I find that to be pretty interesting. But then also that does have some confluence with the 382 here. But you'll notice that was not the high. We actually did go higher. So I had drawn that based on the high of May 7th, which was at a price of 317. But we went up to 331, so I need to move that retracement up a little bit. And so we do see that 382 actually does not correspond with that yellow line. So I am going to remove that. And so just going to do that over here, removing that 382. Do have the 50% level there, which is just below that yellow line at 285. So the 50% is at 281. We did break below that, and so let's look at where the 618 is to see if that could be acting as support. And yeah, that does seem like it could be some pretty significant support, also corresponding with a 786 from a prior retracement we'll have to take a step back and look at. And so those two range in, price of right around 269, having fun with it, up to around 270. So right around there, just below where we're currently trading at. So I do find that to be an appealing level. And I'm actually going to remove that 50% level just because I don't want to be having clutter on the chart there. And so we do see that right around 270. And so taking a step back, we can see that 786 was at a, or I should say, corresponds with this retracement going from the low hit on August 5th of last year. So a very important day in the markets, hitting a low of $2.02 on that day before hitting this wick high of $5.20 on October 29th. And so what we can see is that level did act as approximate support, although we did break below it here on March 4th, as well as hanging out below it at the beginning of April over here. Maybe it acts as support, but maybe we do break lower. And with that being said, I'm pretty intrigued by that green uptrend. What is that based on? So that is based on the two lows over here. So that low from August 5th, and I'm going to guess, without looking, have not checked this, I'm going to guess that low is September 6th. And actually it was September 10th, so I was a little bit off there. We did form this gap here at 221, which has not been filled yet. It looks like nearly got a fill of it when we started to put in it looks like weak bullish divergence, lower lows in the stock price with the RSI being flat there. So pretty interesting there. But now let's see. Yeah, I mean, I could see this going a little bit lower. Maybe it's at a dip buy level at around 270. And actually, I think that this is, an interesting play, kind of similar to nuclear, both of them being, technologies or industries or sectors that, I personally am very supportive. I think fundamentally nuclear is going to be important for, bolstering our, energy resources, our energy portfolio by diversifying. That is really the way to do it, not just going all green or all, one area or the other, but by diversifying. And nuclear, I think, is an important part of that. Also, lithium, very important, whether that is for electric vehicles or just for energy storage. If we're doing more green energy, more renewable energy, if it's wind farms or solar fields, we need to be able to store that energy. And the way to do that is with lithium ion batteries. As far as I understand, that is the way to do it. I know there's also nickel and other ways of storing energy. But yeah, lithium does seem like this could be a nice one too. It's 270, 273, whatever in the pre-market, 274 at close. This could be a nice one to just kind of very casually dollar cost average into a small position with being prepared that it could come down to 221. I'm intrigued by this. So I'm actually, as I typically do, very small, lame positions. I'm kind of intrigued at 270 or really 269. I'm noting both of those in my notebook because I don't have any orders placed, but I'm intrigued. I'm intrigued with this one. But now let's move on to one that does relate to lithium, and that is going to be ChargePoint, charging EV cars, batteries, whatnot. And so I just wanted to talk about this because I noticed something. And so I have to say that I personally am not in ChargePoint anymore. Just seems a little too speculative to me. And with earnings coming up, let's see, it just so happens to be where I had this, I believe that's a blue line at, 604. Let's see, what color is that? No, that's green, but that's a green that confuses me. It looks a little blue. And so that is around when I expect there to be an announcement of a reverse split, because ChargePoint has been trading below $1 for more than 30 days now. And, $1 is way up here. Got this alert up here. That looks like it's, well in the past. And so they're probably going to have to do a reverse split to maintain compliance with the New York Stock Exchange. And so with that, I could see price that being announced around here. They do have to have that reverse split carried out, or at least be above $1, I should say, by August 19th, based on when they got that non-compliance notice. Wow, it's already on the hour. I am running behind schedule. And so, yeah, I do think that there could be some major pullbacks. And with that being said, like I said, I am no longer in ChargePoint. I got out at a high of, I believe, 72 cents, maybe 71 cents. Probably sold average, got out at around 69 cents. With my most recent sells, maybe 70 cents. But yeah, we did hit a high yesterday of 73.9 cents, but we did get a pretty big rejection there. So, I could have exited at a higher price. That's unfortunate, but with the pullback with the close at 69.52, I'm actually not so convinced that this is going to be going higher. I think this does look like, well, it could be considered a bull flag with what happened yesterday. Big wick up and small range in the volume. Small range in the price action there from open to close. We did see a pretty big increase in volume. That's actually like the largest volume that we have seen since going back to April 9th. We had on that day 36.94 million shares traded, whereas yesterday we had 15.02 million shares traded. And so, yeah, I guess this is kind of nice that volume has generally decreased over here. But if we do look back in time, volume has actually been pretty high relative to the kind of the norms that we've seen in the past. And so, yeah, I think that this just doesn't look so great. There was divergence in that volume being, widespread, whereas price action was not. Got a pretty big rejection there. So I think that this is probably going to be coming lower. I do think that 62 cents right around there with this gap fill, I do think that will be filled. So I think that it's one to be cautious of. And then so now I will flip over to, speaking of being cautious of, I saw some posts on X yesterday talking about Plug being a dip buy at 75 cents. I think that Plug is actually really not looking so good, continuing to trade below $1 a share, having closed yesterday at a price of 76.63 cents. Down 7% on the day. As we can see with this bounce here, we've actually seen a decrease in volume as price has gone up. So that doesn't really look so good, that this upside move was not backed by volume. And considering what I was just talking about with ChargePoint needing to do a reverse split to maintain compliance with the New York Stock Exchange, Plug is listed on the NASDAQ. And so let's actually look up some information on that. So looking over here, I guess I need to refresh this page. We can see the listing center for the NASDAQ, and this actually comes from doing just a Google search of NASDAQ $1 compliance closing bid price. I included bid price because that seems to be, what was a requirement, the minimum bid price here. And so what the AI overview says is that to maintain a listing on the NASDAQ, a company must generally keep its closing bid price at or above $1 per share. If the closing bid price falls below $1 for 30 consecutive business days, NASDAQ issues a deficiency notice, and the company has a period to regain compliance. And I had seen something about 10 days, so I just kind of wanted to look up that more specifically on the NASDAQ page here. As you can see, listing center NASDAQ. And so if a company trades for 30 consecutive business days below $1 minimum closing bid price requirement, NASDAQ will send a defiancy notice to the company advising it has been afforded a compliance period of 180 calendar days to regain compliance with applicable requirements. So 30 consecutive days. So let's see, when was the last time Plug Power closed above $1? So on April 29th, we had this candle up here. The closing price was 95.92 cents. But if we look at the previous day, so April 28th, we did close at 102. And I should say, I am no longer holding Plug, but we as in retail, retail that is holding, so I guess that would not be a we because that is not including me, but did close on the 28th at 102. And so from the 29th, how many days have we seen since then? So currently to today, that is 17 bars or 17 trading or business days. And so we're about halfway to the mark of getting that non-compliance notice. And so what I could see is just like at the end of the month here, we did have kind of a rush to reclaim $1 because we were trading below it over here. But we did end up closing the month below $1. What I could see with the end of May approaching and this needing to regain compliance, to have less than 30 days below or to not risk losing compliance, it needs to get above $1 a share within the next 2 weeks. And so if we don't see that, they're going to get a non-compliance notice. I think that's bearish. If we do see that, that's potentially bullish. And so while I don't have a position, I am not planning on getting one from the closing price, a move from there to around $1. That would represent about a 30% swing. So I do think that there is some potential, just like over here, we saw this big move up to above $1, although it did get rejected. I think a similar type of thing could be happening with Plug. So from there to the closing price, that was a 25% swing, but to the wick high, that was, about a 45% move to the upside. So I do think there is potential for Plug, but just for a swing from current price up to $1, maybe up to 90 cents, as that was a top over here, having hit a high on the 12th of 93.8 cents. So yeah, even just up to, 90 cents, or that red line that I've drawn there, that's a 17% swing. So that is pretty nice. So yeah, maybe something to consider. But I do think overall this is risky. I do think they will end up getting a non-compliance notice, whether that's by the end of May. Actually, that would have to be in June. Whether they get that notice in June or maybe July, I think that there is a good amount of risk here. And also what we can see as this has been consolidating here below this trend line, volume has been increasing. So that actually suggests to me a lot of weakness, that all of this volume has not been able to push the price up. So I think Plug is pretty risky. And then the next one on the list is going to be GameStop. This was looking pretty good yesterday, hitting a high during market hours of $29.19. And so around that time, which I guess was a topping indicator, I put out a post, just to see. Actually, maybe I come to the notifications. That is all caps. What was that? I don't know what that was. That's, but I did run this poll. I was just curious about that. Sorry. I could promote this, but I don't really care to. And actually, I don't want that to be, let's see. Sorry, guys. I just don't care to promote that. So, I put out this poll. Is GameStop going to close the week above 30 before the HODL So, HODL for Bitcoin, because, I think that Bitcoin could be making some big moves over the weekend. And it's a 3-day weekend. And so it looks like the majority of people, 11 votes, voted yes, moon, whereas looks like, is that... 2 people voted no boo, and they might end up being correct. This could be a topping indicator, this poll and the vote. We will have to see. It would be excellent if GameStop could close above 30. And so let's just look over here at what the max pain is for the week. It looks like for the week it's 27. So even if we close above 28, GameStop is looking good. And then not to pull up a specific contract, but this is the $20 call expiring 29 days from now, June 20th. I just wanted to look at the data here. And what we can see is that the net call premium from yesterday was down actually over $1 million, but the net put premium was down nearly $25 million. And so while the net call premium does suggest, selling down 1.18 million, the net put premium suggests way more selling, almost 25 million selling, which would indicate, a bottom or that a bottom is in. And so if we do pull up the bear bull slider here, we can see that 63% is on the bullish side. So GameStop is looking good, whether we close Friday above or below $30 a share. I think GameStop is looking really good. So yeah, I just wanted to share that. And I will pull up ASTS because that was requested on X, but I wanted to open it up to what you guys are requesting here. Okay, so Hydro Hustla, I did go over plug. I think there's potential swing there, but ultimately, I do think that plug will be going lower with this volume increasing as it has been consolidating here. That is actually not what you want to be seeing as it does consolidate on the downside here. You want to see volume pick up when it to push it higher, but then there to not be an overwhelming amount of sellers on the downside. And we have seen, what looks like, more sellers, this hitting lower lows. So not really looking that good. And actually, we did hit a higher low here, but then it did break to a lower low. So yeah, I'd be cautious, but I do think that in the next couple weeks, there could be another run like we saw over here up to around $1, but I think ultimately that would be getting rejected. And so yeah, since I did cover that, I am just going to go over ASTS, which is AST Spacemobile, or probably more accurately Spacemobile. But yeah, I like Spacemobile because it reminds me of like a futuristic Batman. And so ASTS did close yesterday at 23.83. The question that I got on X was, do I see this coming back down to 1750, which was the low that was hit on, let's see, January 29th. I actually don't see it coming down to that level. I'm just going to make that white again. And the reason for that is because we have seen this pattern of putting in higher lows. So this low on January 29th was at 1750, and then over here on April 7th we put in a low of 1822, so that's a higher low. And following that, we have been putting in higher lows with the trend up here. Although, what did we do very recently with the lows over here? We did just break that trend. So higher lows going from the exact lows or approximate lows, not the closes or not the candles, but the wicks. We have now closed below that trend line. So that doesn't really look that great. I could probably and should probably adjust this trend line to be, corresponding with those closes and stuff. And you can see that very nice level that we have been respecting, but we have very clearly broken below it. And so what we do have over here, again, just being kind of approximate, is we do have or did have this rising wedge over here where we saw the top side acting as resistance, getting rejected over there with some wicks above it, but ultimately getting rejected. And with that being a rising wedge and us now trading below it, I'm actually going to make the bottom side there yellow because it was support, but eventually we did break it. And so if we do bounce, I could see us getting a rejection from that level before maybe pulling back down to, let's see, 21.28. Why do I have that level marked? Is it significant? And so that level corresponds with the wick high from July 31st of 21.28. And we did get some consolidation below there before launching. And then we did get some near tests of it and then a pierce of it here, a couple bounces following that. Then ultimately we saw a breakdown to that low of 1750. Did get another break here, but then that has acted as a little bit of support. So maybe we do see a pullback to around 21.10. 28. What I would be really concerned with is if it did break down to this low over here of, let's see, 21.33. So I'm going to put a horizontal line there. And let's see, sorry, the low was 18.22. And so I am going to lock that into place, color that line red. That's kind of the line in the sand because then, we did break the higher low trend here, but relative to this low and this low, we still have higher lows. So if we do go, not close, but just even wick down to below 18.22, that would then be a lower low, and that would be breaking this bigger trend here. So yeah, I would be a little bit concerned if we did go lower than that. And then if we do a Fibonacci retracement here from that low of 18.22 up to the high of 29.05, we can see that, let's see, we could be getting down to that 618. It does look like we could be bouncing from right around the 50%, which is at 23.63. Does look like we wicked to below that level, hitting a low yesterday of 23.56. But, like I said, it could be going lower. The 618 is at 22.36, and the 786 is at 20.54, just below that green line at 21.28. So yeah, I could see this going down further, but I'd be concerned if it started to go below 18.22. So do keep that in mind. But yeah, hopefully that was helpful for you. And one thing I, kind of wanted to do this, but I forgot to for the prior charts. But looking at those moving averages for ASTS, we are below all of them. And also I should note by we, I am not holding ASTS. We are below all of those levels. And we did get a death cross over here on the 14th of May, when the yellow line, which is the 50-day moving average, crossed below the 200-day moving average. And from there, we did start to see this pullback. So good to keep that in mind. Looking over at plug, it does look like we have been getting rejected from the 21-day moving average. So a little bit of rejection there. Looking at charge point, does look like we have the 21 and 50-day moving average below us. That 200-day moving average is around 108. But yeah, I think this does look fairly weak with that kind of, notable rejection there, that wick high of 73.90 high during market hours yesterday. And then GameStop, let's see, do have all of those moving averages. We do have the 21-day moving average just below us. Hopefully that acts as support, but if not, we did get the bullish cross over here, and that was, when the 50-day crossed above the 200-day moving average, so that does look good. Hopefully that 21-day moving average right around 27.50, hopefully that holds as support, and we do launch, closing the week above max pain at $27 a share, ideally closing above 30. So let's keep our fingers crossed about that. But yeah, with that being said, I'm just going to remove the moving averages so it's not too cluttered, and I'm going to wind this stream down before the market opens. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. I will be streaming again tomorrow morning for pre-market prep. I'll have it listed starting at, let's see, did I say 7:15 on that thumbnail? If so, I meant 8:15. For me, it's 7:15. My bad about that. But anyways, I will see you guys tomorrow morning. Take care.